Hello, everybody. This is Toni Turner, and welcome to the market now as of Friday, April 19th, just before the markets close. Well, the Dow and the S&P edged higher this morning on gains in American Express after upbeat earnings. The Dow remained pretty positive. It kind of went around today in circles, but remained pretty positive in the afternoon, while tech stocks like Netflix weighed on the Nasdaq following its dour earnings forecast yesterday, and both Netflix and Nvidia fell more than 8% so far today. And on that news, let's go on to three charts that could give you some insight into the week to come. As we first do, we're going to look at a daily chart of the S&P 500 Spider, symbol SPY. Of course, this is a chart of the exchange-traded fund that closely follows our benchmark S&P 500 index. And we follow it because as traders, many times stocks will follow the direction of the SPY. So when I captured this chart today right before the close, the SPY was trading at $494.03. That is 5% below the March 27th all-time closing high, which was up here at $523.17. Now, if we look left, we know that since the October lows, the intraday lows at about $409, the SPY broke out there when interest rates started a little lower and quickly broke out, moved above the 200-day moving average, the black line above the red line, the 20-day, and above the 50-day moving average, the green line. And it marched up using its 20-day moving average for the past 6 months, a couple of little quick dips here, but for most part, it marched up that 20-day moving average and used it as a staircase all the way from the end of October, all the way up here into March. So we've done nearly 6 months now of an uptrend. And after doing so well and nothing we can complain about here, finally the SPY, as I just said, on March 27th, made that all-time closing high at $523.17, and we can see then here after that it started losing its mojo. It fell down to the 20-day. That's okay, but then gapped up on April 4th and fell down to close on its lows. Sometimes when you see those candles, the big red ones that close on the lows, it's kind of a like, okay, we got to pay attention here. So it fell to its low on October 4th at $513.07. Then as we move deeper into earnings season, the SPY fell down below its 20-day in the past 2 weeks, then dove below its 50-day down to, and everybody was talking about 500 or 5,000 on the S&P 500 as being support, but that didn't hold today. Of course, the tech stocks had a lot to do with that. So price fell down here today, and right before the close, again trading at $494.03. Now, the first thing you do as a trader, of course, we look and say, okay, well now where's prior support? Now we look left and we see that in February we had this gap right here. Many times price will fill gaps. So we're looking at that, and I'm seeing that this candle right here, which is the bottom of this gap, as you can tell, the close today, I'm sorry, not today, but the close back in February of this candle was 497, and the intraday low is at 493, and we're at 494 today. Not sure if I can draw a straight line here, but anyway, it's right down there. And I'm not sure it's going to act as support. Then if we want to look for more potential support, we can look back here to February 1st. Right in here, this potential support is 483 to 489. So who knows? Maybe, huh? Hoping that provides some decent support. So at some point, and it will, at some point here, the SPY can slow its downward move and start building a base. At the moment, however, we do have to check in with reality, which tells us that we are smack dab in the middle of earnings season. We have quite a few more big tech earnings coming out next week. which could be a good thing. Who knows? We're dealing with interest rates right now, which are remaining high they won't seem to go down. They seem to be remaining on the high side. And we do know that geopolitical tension is high. So as I mentioned last week, patience is a great strategy in the markets like these, and also maintain your protective stops. The next chart today we're going to look at is a daily chart of the QQQ, symbol QQQ. This follows the Nasdaq 100, the top non-financial stocks in the Nasdaq stock market. That's by market capitalization. Now this is the ETF where momentum stocks like Nvidia, Netflix, Meta, and Microsoft reign. So when I captured this chart today, the Qs were trading right before the close at $413.24. Now that's 10% below its all-time closing high on March 22nd, closing high at $466.38. Now, if you remember last week when we met, the Qs were caught in a pressure cooker here between the 50-day moving average and the 20-day moving average. And we saw the 20-day kind of folding over the 50-day. And when you see this, you know price is either going to break up or break down. And in this case, price broke down through the 50-day moving average. Pressures drove it lower, and again down to $413.24 where it closed today. Now if we look left on the chart, we can see October here, and we can see that the Qs hit the lows here from its prior downtrend. It didn't go below the 200-day moving average, and that's a positive. Tech stocks can be strong. It stayed above the 200-day. The SPY went below its, but anyway, it's when the Q saw interest rates coming up and it hit its lows here at 342, then it made a fast U-turn and it bounced up over the 20-day and broke up over the 50-day, traded at quite a premium to its 20-day moving average all the way through the end of the year. And yeah, there was a few dips, but when we're talking about tech stocks, those are kind of the bad boys of the stock market. So there's more volatile than usually some of the commerce stocks in the SPY. Now, once it walked up here and made its closing high at 466.38 on March 22nd, then as we talked about, it softened up here, then finally fell below its 20-day and tumbled below its 50-day. Now, where's potential price support here? Well, we can see it at the December highs. So if we go back to the December highs, I'm looking for price support here. We can see at 412, 413. Sorry, I dipped that line down. The 412, 413. There is some potential support at that pivot there from December highs. Below that, we have a little bit more at 412, 413. Right in below that, 410, 411. So as we've witnessed over the past couple of weeks, big cap earnings can push the markets around. So please strive to be patient, and remember, cash is a position. Our third chart today is in case the market starts behaving next week. I'm not jumping in too much of anything unless the market starts behaving a little bit, but I did want to find something for us to look at next week. So we're looking at a daily chart of the Invesco Food and Beverage ETF, the PBJ. It has 32 holdings, including Kroger, Constellation Brands, Kraft Heinz, PepsiCo, Monster Beverage, and it looks relatively orderly, and I checked out some commodities and looked at this. Now, when I captured this chart today, the PBJ was trading at right on top of the 50-day moving average at $47.40. Now, right on top, yes, it's below the 20-day for sure, sitting on top of the 50-day, and the 200-day is down here at $44.78. So if we look left on the chart, we can see back to October 12th We see the PBJ made a closing low down here at $40.17. And if you could see the whole chart, you could see it actually made a little tiny inverse, I should say, head and shoulders here, which is a positive pattern. Then it broke out and it marched up all the way up at a premium to its 20-day moving average to December highs at $46.43. Then it said, all right, I'm tired, and it fell back down to the 20-day, walked up it a little bit more, then made a lower high here, which makes you think, okay. So then it started consolidating, fell below the 20-day, then dove below that, actually dove below the 50-day for a few days, walked along the 50-day and the 200-day moving average, and then on February, it broke out to 61, excuse me. It broke out here, came down here, and then broke out, and then rallied at a premium back above the 20 and 50-day, rallied again at a premium to the 20-day moving average to an all-time closing high up here, back here at $48.78. And I looked on this chart, on a monthly chart, and this is the all-time high for the PBJ, this 45.61. So, in February to 45.61, this all-time high here, on March 27th is at $48.78. That's what I meant to say. Okay, so from there, it got a little over, as you can see, it became overbought on the RSI. This is the 14-day RSI down here. It became overbought on the RSI, and that usually means that price is going to come down a little bit. So it started dipping, and now the RSI is back down to the 50 where I want it. Price is back down to the 50-day moving average, which is nice. And if in the coming week, and if the SPY behaves itself, if it starts forming a base at all, I'm not in any mood to jump into a trade for no reason and lose money. But if the SPY starts to build a base and turns more positive, and if the PBJ can stay above its 50-day moving average, again, now coming in at $47.04, let's call it 47. If it can stay above that 47 line, I will add a small position of the PBJ to my trading portfolio, and I'm going to put my stop in down here fairly tight at $45.96. So I'm just giving it that much room. If and when the PBJ can move above this prior high, I'm going to call it 79. So if it can move above that prior high, I will add to my position, and of course by then my stop will be a trailing stop. So you may want to keep an eye on the PBJ in the coming week. Now, if you'd like to become a more profitable trader, now is a great time to check out my online training programs, because we have lowered our prices from our ever popular 7 steps to successful trading to how to swing trade successfully. Swing trading is great right now. How to trade the trend to profits. We're going to wait for an uptrend here and find them when they happen. How to read charts, which is invaluable and great for beginners. 3 winning setups. And how to bottom fish like a pro, which we'll start doing here pretty soon, I hope. These programs are timeless, and to make them more accessible to everyone, we've just lowered the prices. You can discover how you can earn money more quickly, quickly and easily. And again, we've just lowered the prices. So be sure to check them out by going on the link on this screen, or easier still, just click on the orange button below. Until next week, be careful out there. Keep green on your screen. I'm Toni Turner, and this is The Market Now.